Hello and welcome back everyone. I'm CA Harsh Mehta welcoming you to a new video. Today we are going to discuss about the new IPO hitting the streets, Mrs. Becktor. I'm sure we all have eaten one of their biscuits in our lifetime. The company was founded by Mrs. Rajni Becktor, who is the original Mrs. Becktor, and was passed on to his son, Mr. Anup Becktor, and now he has almost 25 years of experience in the industry. Let's first discuss about the business and what exactly it comprises of. The company is an old player in the segment of premium and mid-premium biscuits and bakery. The bakery business of the company is carried on under the name English Oven. The company's main segment is the biscuits, which comprises of almost 60% of its revenue, followed by the bakery business, which is under the name English Oven, which comprises of about 20% of its revenue share. And lastly are the QSR chains like McDonald's, Yum Restaurants, which comprises of Pizza Hut, KFC, Taco Bell, etc., and various other chains, which accounts for the rest of the business. They provide the burger, buns, and many other stuff to these QSR chains. Regarding the last part, that is the QSR business, the company is the biggest supplier of bread and buns to the leading QSR chains, and which is a good positive of the company, as it can benefit the company and its growth with the growth of these QSR chains in the country, which are on a rise. The biggest difference in the between the company and its peers is that 100% of the output that the company sells is manufactured in-house, and there is no output that is sold based on contract sourcing. So that is the main advantage and differentiating factor of this company. All the factories are located strategically all over India from Punjab to Karnataka. The company has exports to about 64 countries, and it accounts for almost 20 to 30% of the revenue, which is a good share. And the company aims to improve its exports business constantly. Main markets in the export business are North America and East Africa, accounting for almost 50% of exports currently. Let's discuss about the terms of the offer. The offer comprises of offer for sale worth rupees 500 crores and a fresh issue of 50 crores, adding up to a total of 550 crores. So mainly speaking, it is most of the part is the offer for sale, and the proceeds will not go the company but the existing investors. The company has various plants located strategically across the country, and the latest plant commissioned by the company is at Rajpura, Punjab. And the main object of the fresh issue, that is the 50 crores, is to expand the production at this Rajpura plant. The pre-issue promoter shareholding is just above 50%, and as the most of the issue is offer for sale, it is not going to impact much on the promoter holding, and the promoter will continue to hold just above 50% even post-issue. The selling shareholders have bought their shares at an average price of 175 rupees, and the issue price is around 286. So they are given a good exit, as we can say comfortably. Now, let's discuss some of the risk factors that the company thinks it has. A big part of the business of the company is with QSR chains, Indian Railways, and other big clients, which were gravely impacted from COVID and in turn impacted the company. With no full recovery in sight and possibility of further mobility restrictions, the near future is a bit uncertain and can be impacted negatively. In case you are wondering why they are not using the famous name Mrs. Becktor's for its bakery business, because it is already an established brand. Well, there is a reason for that. There are many companies within now separated family, and as per the agreement of separation, they are only allowed to use the name Mrs. Becktor for their biscuits business. And so, in case in future they plan to expand their business into new industries and new products, they will have to invest again in building the brand name for the new product. Now, let's discuss about the financials of the company. The revenue has been growing at a nominal rate of 5% every year (CAGR) for the past 2 years, This shows that the company has no exorbitant increase in sales expected, but in turn is stable and can be expected to grow at a stable rate. Gross profit margin has been just fair at about 47%, which is good as compared to its peers, whereas the profit after tax on total numerical terms has been declining period after period, which is not at all a good sign, showing rise in cost and cost of operations. The employee cost of the company has been growing at a higher rate than the rate at which the revenue is growing and the profits are growing, which is not at all a good sign and could prove to be a pain point for the company in future. The company has been showing a decent return on equity of 10% over the years, and the company has debt, but the same is within comfortable limits as the debt equity ratio as at date of issue stands at 0.4 and the interest coverage ratio is well over 7 times, so it is in comfortable limits. As the company is a manufacturing company, it invests heavily in equipments and plant. And so majority of its funds are tied up in property, plant and equipments, which is justified from the nature of the company. The company carries low inventory and trade receivable balances, which is good for company as less amount is tied up in working capital. The cash flow from operations are very strong and positive for the company, which is a really good sign. Let's talk about the valuation of the company. The NAV of the company as at June 2020 stands at 58.46 rupees per share, and at the upper end of the IPO it is priced at a PE of about 54, which is normal in the FMCG sector, but given its revenue growth and profits growth, also its return on equity numbers, I personally feel that it is a bit high. But again, as the investor's price is about 175 of buying, they have to give them a meaningful exit and hence cannot price the IPO low. Now, let's talk about the industry outlook. First, let's all talk about the macro industry outlook. If we talk about the macro industry outlook, overall, the biscuit and bakery business stands at about $450 billion and is expected to grow at a CAGR of 9% annually up to 2025. Now, let's compare the company with its industry peers. There are many listed peers of the company, of which some are Nestle, Britannia, and as we can see that the revenue numbers and return on net worth numbers of the company are not quite impressive as compared to its peers, and it fares behind of almost all its peers in size and performance. And when we compare the PE numbers of the company, which is 54, with its peers, we can see that it is richly priced given its performance. So, overall, as the market sentiments are at its peak, and that is what matters for the listing gains, the answer to your question that should we apply for it is yes, one should apply for it, and one can expect a return of 35 to 40% on listing given that the market sentiments continue to hold to listing. So, this was Mrs. Becktor's for you. CSCA Harsh Mehta signing off.